before this video begins, please remember that all views and opinions expressed in this video are my opinion only and should not and do not constitute financial advice in any way. Yeah, with that out of the way, I was tweeting earlier today how AMC at $12-ish is pretty much equivalent to where we are now, and what I'm going to be doing right now is showing you why I think this is the case and why I think we are about to really go parabolic, go insane, from a technical perspective only. So I don't even know where to begin. I guess first of all, let's just start with yeah, you know what, I'm going to start by analyzing AMC first, actually, just because I think this will help to kind of put things into perspective. So first of all, what I'm going to do is I'm going to show you guys, let me just do a drawing drawing from scratch. You can kind of see this whole process. So what I'm going to be doing is taking Fib retracements from the low, the entire move, to the high, the entire move. Stop texting me. And well, here's what I want you to pay attention to. Actually, you know what? Let me put in a 4-hour because we did go higher in the after-hour session. So yeah, let's do this up to here, back to the daily. And here's what I want you to look at, right? We touched above the 0.786 level, and this is actually happened in Tesla as well and Volkswagen, which is actually a really interesting comparison. I'm not going to dig too deep into those in this video, but maybe another time. So remember this, right? In January we break above this area right here. This is critical, and now we're going to go back over to here, and actually I already have this drawn out, but what I'm going to show you is this is where it gets really interesting, right? And so, as you can see, same thing here, right? Touched the 0.786, and we've been completely sideways since then. So just use this as a roadmap, first of all. The target I have up here, disclaimer, this isn't how really you're supposed to use Fib retracements. It's not really supposed to be like a predictive indicator, a predictive tool like this, but you kind of have to adapt to what's going on. But note this is important. So now I'm gonna dig into it on a much smaller scale. I think TradingView will do a better job at kind of just conveying this from like a really basic standpoint. So what we're gonna do is we're focusing on this area right here. Also, for another disclaimer, I don't own any AMC. I did buy call options at 2, and then obviously in January we shot up to 20, and I took my money and threw it all in GameStop. But here's what I want you to look at, right? God, I don't like this. But it's okay, so here we are, right? I'm going to go back to Thinkorswim in a second, but just visualize this structure right here. We had this run up, flagging period, which caught most people off guard. This is supposed to, they're anticipating bull flag, break out to the upside, fake out. And obviously, we know what happened after that. Now we'll look at GameStop. Same exact thing. Same thing. Right, strong move up. Everyone thought it was going to break out to the upside and drop down. And so another reason, there have been a few theories, kind of going back and forth, trying to see if the correlation between the two is still there. This is another interesting part to consider. If we look at this structure right here, this was February to March area. Like upswings and downswings, it's 1, 2, 3, 4, 5. I wouldn't really put that into waves terms. I don't really know how I'd count that, but just remember that formation. And the same thing happened right here later. And so my thesis has been that AMC has been leading the charge. I don't really know how to phrase it, but GameStop is lagging behind it, but it is going to catch up. And now we're going to dig a little bit deeper into the Fib sequence, and this is where it does get very, very interesting. So let me actually, no, that's fine. Pull out the time extension ratios, and we're going to be looking, let's ignore that massive move first. Let's just focus on here. And so we're looking at this as a wave 1 up and then a wave 2 down. And so we're going to measure the length of the 1, and remember what I was saying, 0.618, 0.786 are the most common wave 2 ending points. And if you look here, 0.618 is when, AMC started to do its thing. Same exact structure, same wave setup, 1, 2, and then obviously 3, 4, 5, however you want to count that. right? And so we'll go back to GameStop, and already I was talking about this in the last video I did, I think, but measuring this up to here, 0.618 being 917 and 0.786 being 922. So my thinking is, if this does replicate's not the right word, I guess follow suit with AMC, I'd expect to, I don't think sideways is the best way to phrase it, but I would expect to start to go, if the fibs line up exactly, I would expect this date, 9/17, to be the kickoff date of something ridiculous. Also really quick, touching on what I was saying in the last breakdown I did. God, this is like horrible to look at. Oh my God. Saying how I expected something, or how I expected it to kind of go like up to here and then back down. I'm not going to retract that. I do think that's still very much a possibility, but people have been asking a lot if I do still think that's going to happen. I don't know. I really don't know, because the thing is, this has been set up, like this move down here is a completely valid wave too. It's just really short. And so that's why I'm thinking that there might be more to it. Obviously, if we shatter this 231 level, then, it's more or less confirmed to be impulsive again. It could go in something like an expanding flat or running flat. So it would be like you have your move down, then you move up to here, and then you move back down to here. I don't know. I don't think that'll happen just based off of AMC. Not that that's like the best comparison to make, but okay. Now that I got that out of the way, I'm gonna start talking price targets. God, I wanted this to be short. This isn't short, I know it. Let's clear these drawings. Remove clear drawing set. And we're gonna be taking out our extensions, and we're gonna be seeing if we could have actually, predicted this madness. And spoiler alert, you can. But, wave 1 up, wave 2 down, something like that. Remember, 1618 is most common wave 3 target, and watching it in real time, I had a few people that were in on it. They were asking me for sell points. Obviously, I don't give financial advice, but I was saying look to, exit some at 35, and we hit 36.6 and then drop back down to like 24-ish. And so with these same ratios in mind, I'm going to touch back on like how high it went, like after that move later. But with those same ratios in mind, right? God, this is horrendous. Go back to this one. Clear that, not duplicate. With those same ratios in mind, right? What we're gonna do is load a high. Technically it went up to 513, so let's just do like that. Down to here. The equivalent of AMC at 35 is GameStop at 863. And so what I think that the trajectory is going to look like, and obviously, like, don't quote me on this, I have no fucking idea. This is just me trying to make sense of the madness that is 100% about to unfold. I mean, like, even from a super basic technical analysis perspective, look at, like, this whole wedge is about to, do something ridiculous. But if it replicates AMC, which I have reason to believe it will, I assume that the next rip upwards is going to test upwards of 863, retrace down to 550 area, and then from there, okay, bear with me, I'm going back to AMC so we can try and predict the very top of the move. Now for your wave 5, you go measure 1 to 3 down to the low of 4, and ideally, 0.618 and 0.786 are your targets, but if you're looking on a daily candle, we just power through everything. And so it goes down the line after 0.786, you're looking for 100, blew through that, blew through 1236, and 1.382. Level I have is 72.28, topped at 72.62. So remember this ratio, the 1.382. So assuming we hit that exact same ratio, that would put the high of this next run, wait for it, 1382 extension comes out to 1729.8. Yeah, I know. That's insane. But I also want to touch on this. God, I have so many counts. Guess 8 counts, Count Dooku, woo. See, the other thing to consider is, God, another more back and forth. I'm sorry. I'm trying to portray it all. Actually, you know what? Let's do this. This will just make it a lot easier. So looking at fibs, let me draw fibs on here. Retracements from low to high. With and remember, 0.786. This is important. With that same ideology here, you know, that puts GameStop's high this run at 2,200, which would actually just constitute the mega wave 3 from, you know, the low from 4 to the high of 483, whatever. Obviously, I have no fucking idea. I wish I could see into the future like that. I'm just using predictive models to try and anticipate what's going to happen. But, you know, on the topic of a fake squeeze, I think this is important to talk about because if there is a fake squeeze, I anticipate to go exactly like this. It would go, you know, from wherever we're at now, 200 up to like 2,200, back down to, I don't know, say like 500-ish, and the media would be like, oh, squeeze is done. Obviously it's not, but if it does happen, that's how I expect it to go. Was that one more thing I wanted to touch on? Right. So actually, let me go back to just the AMC or just the GameStop. Talk about how Fibonacci also supports the move to 2,200. So let me just hide this curve. The point, yeah, I think it's that one. Yeah. And so if you've been following me for a while, I've talked about how 4.236 would be like your hyperextension, something that you see in like markets of mass hysteria. Short squeezes being one of them. Obviously, this wouldn't be the squeeze, but all I'm saying is Fibonacci from these current levels supports a move up to 2,200. And like in theory, it could go from 2,200 back down to like, you know, like 500, and that would still be a valid setup. If it doesn't, you know, let's say hypothetically it goes 2,200 back down to something way lower than that, then this whole move would just be a larger wave 1 and then a wave 2. And, you know, from there, obviously, let's just foreshadow for the hell of it. It's funny to think about. Not this one. Do a bit of foreshadowing. So let's say, hypothetically, it goes something like... So, 2,200, down to 200 again, give or take, right? That would put the wave 3 target of the next one up at 3,800. But obviously, you know, at that point, I feel like when the squeeze is on, everyone will know when it's really happening. I'm still going to be trying to analyze it, but I can't say like how effective it'll be. I will say that it did predict the Tesla squeeze, and it gave really good buy and sell points. But I am probably going to have to buy a TradingView subscription so I can get my Fibonacci numbers in logarithmic scale, because that's usually for like the moves of massive scale. That's the scale you're going to be using instead of arithmetic. But I think I covered about everything. Hopefully you guys are checked. Basically, if the Fib dates line up, the 0.618 ratio for this current cycle for GameStop would be on right here, 917. And so, yeah, that's when it would start in theory. I don't know. We'll see. If it doesn't start then, the next date being 922, 921. I don't know. My fibs are like weird on this view, but 917 and 921, 922 are the dates I'm watching for. But, yep. Hopefully I jacked your tits. I am probably not going to be sleeping tonight after thinking about this. I know everyone put out their calculators as I was talking about this, but yeah, thanks for tuning in. This turned out to be a little bit longer than I expected, but catch you guys later. Peace.